2, 1, action!
Okay, so today we are here to talk about the new HARP, which stands for Home Affordable Refinance Program 2 program that was just rolled out by the government. This comes into effect on March 17th, okay, of this year, of 12. And what this does, this replaces the old HARP 1 program. To be honest with you, the HARP 1 program was just awful. People were getting denied for having MI, for being too high of an LTV, for not having good enough credit, for having too high of a DTI. This remedies a lot of those problems. So we're going to go through and we're going to illustrate kind of how great this program is. Now this program is available for people who have a conventional loan, and we'll talk about that a little bit, that was originated before May 31st, 2009. Okay, now it has to be insured by one of two government entities, either Fannie Mae, or Freddie Mac. Okay, Freddie. Now to find out, the easiest way to find out if your loan is owned by Fannie or Freddie, simply give us a call. We'll be able to look up using our loan tools, see if your loan is owned by Fannie or Freddie. Even if you're making your payments to Wells Fargo or Bank of America or GMAC, more than likely if it's a conventional loan, it's going to be owned by Fannie or Freddie. So you'll want to make sure to give us a call so we can help you out with that. It'll show up on credit reports and different things like that as well. Now, some of the major things that changed with the HARP 2 programs is, one thing is the credit scores, okay? Before you had to have pretty good credit for a HARP 1 loan. Now for HARP 2, if your credit score is above a 620 and up, you're golden, okay? Now of course 620 is not perfect credit, it's not terrible credit, but you can still have a few bumps and dings and still just be just fine to get this HARP 2 loan program. The other thing is income. Before, where HARP 1 fell short was if you had a debt to income ratio, basically your gross income, if more than 45% of it went towards your debt showing on your credit report, more than likely you were going to get denied. Now, more than often, we can probably go up to around 65% for the debt to income ratios and still get an approved through underwriting, and you'll be golden that way. Now, the different property types that can be done on this HARP 2 program. You can do a primary residence, okay, primary. You can do a second home, as well as you can do an investment property. A lot of lenders weren't doing investment properties with HARP 1. With HARP 2, it opens it up. Even if you owned a home previously as your primary residence, moved out of it, kept it as your rental property, and lived in a different place, you can refinance that existing home, that original home, on this HARP 2 program as a conventional loan. One of the most important things that we're excited about with this HARP 2 program relates with mortgage insurance. Okay, now mortgage insurance is something that is applied on your loan if you were over 80% loan to value. If you had higher than an 80% mortgage on the value of your home, then you were required to have mortgage insurance. Now those of us who did not have mortgage insurance previously, and our homes, now we're upside down in them, right? Now we're 105 or 110. The HARP 2 program, if you didn't have mortgage insurance, then you don't need it now, okay? If you had it before, if you had MI before, then you get the same mortgage insurance, and that's great because mortgage insurance premiums have gone up, so that can save you a lot of money that way. One thing with HARP 1 is the loan-to-value limits. Even though they allowed some people to be upside down in their homes, they only allowed them to be lenders were basically placing loans at 105% of the loan-to-value. So if I had a home that I owed $100,000 on, well, that I owed $105,000 on, my home had to appraise for $100,000 to get that. And under certain circumstances back then, you'd be able to go up to 125, but that was really, really rare. Now, there is no limit as to what your home has to appraise for. The great thing is now we can also get appraisal waivers. Since there's no limit, they're kind of saying, well, what's the use of having an appraisal? So a lot of times in a lot of the loans, we'll be able to get appraisal waivers where you won't even have to have an appraisal on your home that way. There will be some circumstances that you may need to have an appraisal, but even with an appraisal, since you don't have that limit, it's not going to be a reason why you're denied. Another thing that goes along with HARP 2 and these LTV limits is something called combined loan to value, CLTV. Okay? What that means is if I had a second mortgage previously, on HARP 1 you weren't really able to it wasn't very easy to refinance with a second mortgage because they had limits as to what your combined loans on your home to the value of your home could be. But with Harp 2, there's no CLTV limit. So if I get my second mortgage to subordinate, the first mortgage is just fine to refinance on a Harp 2 loan. Now, one thing that we're able to do over here is something that's pretty exciting. I know a lot of people are really excited whenever they refinance to skip a month of payment. That's something that can be really helpful in their budget, can free up some extra cash, pay down higher interest credit cards and things like that. Well, with this Harp 2 program, we can structure it to where you actually get to skip 2 payments. Okay. Now, of course, that will involve some wrapping in of some mortgage interest into your principal on your loan. But to be able to skip those 2 months of payments can be great. It can do wonders for your budget. Go out and treat your wife or husband to something, right? The other thing that we can do is we can wrap in the escrow payments, and this is really crucial because escrows make up a large portion of your closing costs. And by wrapping these escrows in, what will happen is you don't have to come up with those at closing, and you'll get a refund from your old lender for your old escrow check. So that will give you extra money on top of your skipped 2 months of payments. So you'll want to make sure to call us to set that up. We have to time it just right during the months to make sure that we can do that, but that is something that we can do. Now, one thing that the government was smart in doing is they only allow this for loans that were originated prior to May 31st, 2009. Back in May 31st, 2009, interest rates were around 5.75%. Okay, so they were higher interest rate loans. Well, they were still great interest rates, but not compared to today. Today, we're more around the low 4s, okay, low 4s. Okay, so if we're around 4 1/4, and of course we have to say that's with an APR 4.61%, okay? But still, to be able to do that, if we didn't have mortgage insurance before, just drop our interest rate by more than 1.5 can save us a lot of money. We're just to illustrate that on a $250,000 loan at 5.75, your payment would be around $1,458. Okay, and now at 4.25, that same payment would be around $1,220. Okay, that's a difference of over $225 a month that you can free up in your budget that way. So it's a great time to act with interest rates being as low as they are. Now, some things I just want to finish up with is some anomalies. We can take people off of loans, or we can, or in certain circumstances, we can add people onto loans. So if you had a co-borrower before that co-signed for you, want them off, we can take them off. Okay, if you want to add someone on, if they have the right credit and things like that, we can add them on as well. The great thing about the Harp 2 loans is they've made it a very simple process. It's very easy to get approved. It's a very easy process to apply for. There's not a lot of documentation needed, and the rates are so low right now, it's very crucial that you call us as soon as possible. So that covers all of the Harp 2 changes that we wanted to go over. Hopefully you found this informative and educational, and we hope to hear from you soon.